Hey everybody, it's the Market Sniper. Welcome, it's the weekend time. Yes, boy, have we got the most important video you ever going to watch on this channel right here, right now, monologuing. Yes, you better believe it, with yours truly. Oh boy, is it going down or is it going down? So here's the news. This is your reset. It's busy happening. You're watching it all happen around you. Half of you are not realizing it. Some of you are. You don't know what to do. Here's what's going down. We gave you earlier on in this week's, month's, beginning of this year, the facts that gold and silver are getting ready for core breaks. Gold broke November, had a little rest, wound up. We gave you that. It was setting up beautifully. That broke to the upside. Silver then joined it. Key breakouts. We'll be looking at those in the charts just now. We're going to be talking a lot about gold and silver, in fact. Don't forget to hit that link below that says pure gold and make sure you secure yourself some, because I'll be telling you why. I'm going to be showing you today the most bullish chart for gold and silver, and then I'm going to show you the second most bullish chart, and I'm going to remind you that on the macro we have been the most bullish person on macro, suggesting 4 digits and the possibility in an extremist event of even 5 digits silver. That's right, you heard me say that. That's obscene to even think of such a thing. We'll be explaining to you why that's potentially possible in what will be a major fiat and debt devaluation. We have continually asserted on this channel that you had a seminal bond turning event in 2020. We were the only ones that said it, and it was the first time we ever called the top on the bond markets. It was our first and only call, and it is taking shape ever more. While everyone else fascinated on when pivot for the last 18 months, 2 years, we told you much less likelihood of cuts and higher for longer. It's the rare truth that they did give you, the Feds, and in actual fact, we have an interest rate super spike theory that absolutely conflicts with any major significant pivot. You may get a cut, cuts may be pushed out, you may not get a cut at all. They'll be very limited if they do come, and the eventual outcome will be ever greater rate hikes, and you are on the inflationary side of a hyper stagflationary environment. The balloon is twisted, and the one half of the balloon gets the status money, the servers for surveillance finance and all of that. That is your Magnificent Seven, your Nvidia chips, rah. And then there's small business, retail, man in the street. That's the other half of the balloon, and you've never felt so tight. It felt tight. Guess what? You didn't get interest rates that matched the true inflation rates, not the fake lie that is the BLS. Sounds very much like BS statistics that is being put out in terms of the CPI. We will be doing a chart for you on that. So there's so much to share. We've got to get talking. Let's remind you also of some of the videos we've done recently that we're going to be going past the charts. Over here, you'll see the soft commodities off the charts. There's yours truly telling you about all the coffees, cocoa, everything. The softs are absolutely moving. We've been highlighting this. We gave you the 3 great inflation trades, Granny, Yoda, Yellen, that printed up 7 trillion new debt instruments in the final quarter of last year. The last time you did that number is the only other time, and it was an all-time record for 250 years, and it was in the middle of a global breakdown in the economy due to lockdowns and experimental medicine. That's right. That all happened. That all happened in 2020. You surpassed, or you met at least, the same level of proliferation in 2023, the final quarter. And how you think that number's gonna look at the end of Q1 when they finally release it as we storm into Q2. Yes, it's getting ugly out there. So let's go straight to a couple of key charts. We gave you on an upside HVF and a W bottom on a far bigger time frame. Some time ago, we were entering, not that long ago. Listen, it was literally around the end of March, Easter time, longs on the Arabica coffee contract at 186. Boom, boom, bosh, up, up, up. Beautiful little wind up after making its first target there. Little squeezy, squeezy, Japanesey. Up you go for some more juicy upside. Storming Coffee Arabica on this channel. One of many softs that we highlighted to you that would be going through the roof. We also showed you the same chart on the daily time frame and said, but in fact, having broken into that HVF trade, you can hold it for potentially a 300 run, but with a 290 target definitely on balance of probabilities if the pattern performs. Remember, that is not a guarantee. However, 300 to be run. Wow, isn't that impressive? Isn't that a move of some scale? And by the way, this is the slow coffee contract. Don't forget, you can also have a look at, let's go to Robusta, my apologies, Robusta contract, and we go in there and we have a look at the inflation trade ETFs. Woo! And that there is your Robusta trade. Wow, look at that one going. So we've been talking about softs. We've been saying people need to even have a look at the Bovespa index, which is Brazilian, which has got a large amount of exposure. We've been doing the charts on this fine fella for many, many eons. Don't forget this turn on a head and shoulders. This was discussed both inside our community, and I think we did a release of a video on it some time ago as well. Wow, what a bottom that was. Up, 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 then a pullback after smashing that reversal target. Up she goes. Every pullback is a buy. This is in an absolute ripper state. Let's take that tag off. You can see that is your Robusta bean. But you say, droughts caused it. Droughts caused this. Oh, really? For coffee? What did it cause it for cocoa as well? Is it doing it for iron ore? Is the drought driving iron ore prices? How about copper? You guessed it, friends. This is your inflation. This is our inflation right here, right now. They are printing the value. You are busy experiencing the early stages of, it's not so early, debt and fiat collapse. Everything is going up. You think your inflation number is going to come down? Never. You're getting an interest rate spike. We said it in 2020. We repeated it when everyone else was talking buy bonds, wear diamonds. There wasn't one, there were many. Look at this upside move. This is really, really powerful. Then there was, of course, our friend Cacao, which you've probably seen, but you probably want a little bit of reminding about. Let's add him in there as well. COA. That's right, Cacao. Let's add him in. Look at that for a box of chocolates. Ooh, who doesn't like a bit of chocolates? Your chocolates go out to get a whole bunch more expensive. Beautiful macro upside HVF setting up here. This was not the chart we had. We actually had the futures one, but it was in there. Massive, massive moonshoot. Oh, but pullback. Not so much. Pullback, not so much. It's a hockey stick, my friend. This is an absolute hockey stick. The price is going higher, faster, and it is absolutely voracious. Soft commodities, scale businesses which had a lot of technology. Inherently, farming should be disinflationary because you get better, you run it on less people, your costs get reduced, it's commoditized. Other people with land's pretty common still, can farm and scale and do things in big sizes, and you can still end up making just normal profits at best. There are no super normal profits because the barrier to entry is low. Own land, borrow from a bank, etc. It can be done. Well, I'm here to tell you, by the time these industries start moving like this, your fiat is binning it. See that chart inverted? That's the value of the fiat in your bank right now in terms of buying power. It is spilling, it is puking, it is dying. This is a fiat debt debasement cycle. Here's your TLT. We gave this trade long time ago. It was on the weekly. All the bulls here. This was during March 2020 when you got a super spike. This was peak bond. This was peak bond valuations. That's right. The ETF was at super valuations at 180. We called this first inverted in a new trend there, right there, and called it when it broke our bagel brine. This was still June, July of 2020. We said you will spill when you get a bounce here. You may get a shoulder. It was a bigger shoulder than we expected. You ran our target. We sell that resistance. More downside. Guess what? New low. Failed to make a new high and turning around and spilling. Are you going to buy debt? You have debt in everything, in your pensions, in everything. Sell, sell, sell. Get out of it before it dies. What should you be buying, my friends? You should be buying a little bit of this. That's right. We've shown it to you before. Pure gold. Link below in the footnotes. Deliver almost anywhere bar Australia and Nigeria. Look at that little fella in his condom there. Beautiful, beautiful, heavy, unique, special properties. I will be showing you why these are going to go up even more than you think. It's going to be the difference in one of our most popular videos that said a polarizing event is coming. You will be either selling your children's kidneys to stay alive and prostituting your wives, or you will be a bullion stacker, my friends. A bullion stacker, real, fresh bullion stacker. Let's show you that video. It was one of our most popular and people got to understand what we were talking about in that. Popularity by views. Major transfer event. Be the 9% or fail with the 91%. This is such an important video. This one was done. I'm here to tell you, this is what's going down right now. It's happening. You know, when I recorded that in 2017, everything has transpired that was said and is now accelerating at an ever faster rate. Fail to hear me now in my most important prognostication. I'm preaching from this pulpit, my friend. You will regret not acting on what we're saying today if you sit, and you will be rewarded for acting if you do. This is a runaway market for commodities right here, right now. We gave you the ETFs. So apart from that bear market that's going to make new lows on the downside, we showed you a couple of ETFs. We showed you them in HVF upsides. We showed you them with these targets on inverted head and shoulders. This beautiful little upside is moving since we gave it to you. It has already begun moving. That's it there. Already begun moving. That's a 50% call from there. And we've got the even bigger targets right the way up to 138. Why do we have those? Because of a W bottom. That's why. You're breaking into the metals and mining ETF, which is going to shift extensively from 54 to 138 potentially. 54 to 138. What do you think is happening there if you are going up nearly 3 times, 2.5 times? That's right, you heard it, and moving fast. This is not 50%, this is 2.5 times higher on something that doesn't really move much. Remember, everybody tells you they've done nothing for years. Now they're going to start doing something, and now you're going to see it. COPX, copper, that's right, we gave you this HVF. Let's show you this one. Bring it in, there we go, there's the low. Let's show it to you on there. Let's go back down to 3 times daily. We showed you this on a big move to the upside. 1 second while I get my jaw sorted out. This too, in that video that we showed you, will go at least 50% with plenty room for overperformance to the upside. There it is finally. Going from when we gave it to you in around 38.55, it is absolutely streaked up to 46.40 from 38, and it's heading through 66 with further upside performance. Copper is going up. They will tell you, oh, there were problems with certain copper mines in such a place, and the rains didn't fall over the cocoa fields, the coffee fields, the everything, and the iron ore mines had a shutdown because of this and because of that and late delays. They'll have a story and a narrative for you on every single reason why all the commodities we are showing you are breaking to the upside in upside HVFs. The only story is the debt story, the fiat story, the fiat that was borrowed into existence and intermediated through a failing banking system. Debt, fiat, and banks. Deadly, all of them. Downside, and with that, if you wish to preserve your value, I'll be showing you why this is one of the single smartest things you could be doing. That's right. And we're going to go to the most unbelievable 2 charts still to come in this video as to why you should be wailing in like a lunatic and running your bank accounts as lean as you can get away with just for covering your basic costs, and all in precious metals, silver and gold. That is absolutely coming. What else did we show you? We showed you Aya, the gold trade over here. Let's get that one onto a bigger time frame. We said this fine fella has got a nice little move in it to 24. You guessed it. When we called it, it was over there. It had just had its earnings and dipped to our axis. You could have got it on the just-in-time entry at about 11. That's 24. That's not twice. That's going on 2.5 times, and we're going for 71. That is a bull flag continuation. It's a continuation pattern. This was the down leg. That led to the up leg of 2021. So you've got that projection upside to 71.69. Huge targets, massive moves from 11 to 71. You're talking 7 times. That's how much your money will be going down in buying power. You'll need 7 times the amount to buy the thing you bought for $1, $10, $100. You're going to need 7 times the amount. These are all proxies of multiple, of different degrees of cost for the inflation that this captured central banking cartel of proliferators have put and spun for you. This is the fact. Those are the guys, those are the perps, and that's what they've done for you. And I'm here calling them out and telling you what to do. Because if you don't, you're going to fall foul of being the monkey on their greased pole. And you're going to skid down into the bottom of that shark tank. And we're here to try save you from that. And this is really important. First, link below to book a call to join our community to absolutely max out what is coming like has never been coming before. This is it. You are watching it. CPI come in hot, gold dip, gold go up, long run even faster. Silver minor dip, go up even faster. Yes, that's right. PPI come in cool, gold dip, go up even faster. Silver, not even dip, go up even faster. That's what's happening in the fundamental. Though it doesn't matter what news they throw out, the world has seen that debt is over as an asset class. Nobody wants their treasuries. Nobody wants fiat. They've suddenly all realized the tune has changed. That's what's happened. It took 3 to 4 years after our original call in 2020 for everyone to realize the debt market is over. You are now seeing the eventual. We talk about 5 stages to a breakout. The feign and break, the first move, the second chance. You get your capitulation stage, which is when 90% of all your money is going. You are at the doorstep of it. You haven't yet begun. There's plenty of time. It's not expensive now. Wait till you see where it is next year. Wait till you see where it is in 2.5 years. Wait till you see where it is just this Christmas. By the way, you've already done Q1. You're into Q2. It doesn't sound that far away, actually, when you start to think about it. What else is gone? Let's show you a couple of other things. Look at this fine fella. This is you guessed it, oil, gas, and exploration. That's right. Let's put our draw tool on there, available to all our community members after they've completed their study in their first year. That's right. We're going to be rolling it out to them soon. You too could be getting an HVF draw tool after you've shown your proficiency and got up to scratch and done your share of manual draws in the community. This projection, 221, risk reward 2.4 on one of the fattest funnels we've seen. You could have been in this when we were talking about it. In and around the axis, your risk reward could be a whole bunch tighter. What does this say to you? Energy going up. Energy going up, my fine friends. Energy to go up. Overperformance expectation, absolutely. We expect it to overshoot. This is one setup in a series of much bigger time frame potential setups. So I'm showing you the first leg in what's going to be a sustained move to the upside. You can even have a look at Rockefeller Oil in Exxon. They're all heading up. When you look at them, you can see they're heading up. What's going on with US oil? We said to many, this is a rounding bottom. This is a rounding bottom. You're getting the beginning of a bit of a W structure, and you've got already on a smaller time frame a W structure that should see you get up there. That could see you make this and pull back, make your right shoulder. You've got a left shoulder right there. You're going to get a nice complex head W. If you get up there and you make your right shoulder, we'll be good to go. 130 again, 130 again, the absolute peaks post the bounce back once we had throttled all supply following the events of March 2020. Hasn't it? All these things come back to the games they played in 2020. You thought it was all about social. You thought it was all about the medical. What actually it was about was the financial too, the markets too, what it gave them as a tool in the markets, giving the volatility and the shakeouts and impoverishing the masses and enriching the billionaire class. War and inflation enriches the billionaire classes, makes the middle classes, the lower classes, the working classes, and the poor classes all poorer. That is the game. You will own nothing. You will own nothing and be so happy. That's right. So we're going to go now to boat and show you the shipping. That's also beginning its move. Remember that one, 45, the ETF there. Right. I want to show you the two most exciting charts. There's many exciting charts to actually show you, but I'm going to show you this one. What are you looking at here on this chart? Wow. I mean, wow. This is probably number one of the most exciting charts you can imagine. Macro gold. Gold macro, right? Right back to 1970 and the big bull move over there. You are looking at the gold price divided by the Bureau of Labor Statistics inflation rate. CPI-AUCSL. That's right, CPI. Call it CPI-II. Don't forget the USD JPY. The dollar has got strong. The dollar milkshake element of fiat to fiat is part of a much smaller story. It's a big story, but in terms of the overall collapse, the real trade is in actual fact in physical things, especially gold and even more so silver. This is the case I'll be making. Of course, the dollar will dominate during these periods because they will lead the interest rate hikes, or initially not making cuts, which is where we are now. Eventually the hikes will be needed because they have to devalue debt because they keep printing ever more of it. We are at the foot of a parabola on the fiat creation, debt creation, interest rate payment cycle. This is the engineered collapse. This is where they've been planting all those explosives for this demolition job that they are now doing. And the splurge of expenditure courtesy of Yellen for new immigrants in America, etc., etc. It's all part of destroying your financial structure. That's right. It is explosive. It's corrosive. It is social management. It is destruction. It is destruction of the fiat. And we've been waiting for this for a long, long time. This chart is gold divided by CPI. You can see it didn't perform well in the run up to 2000. Then it was at an absolute low and then it got a moderate move. This was not a full bull market. 2011 was not even close to even a 10 or 15% bull market in my opinion. This is all a massive squeeze that is getting ever tighter with the cycles getting shorter. Beautiful little squeezy Japanesey. You are accelerating out here at this time. You are accelerating out here at this time. The debt collapse is far bigger story than anybody else's theory. The debt and fiat collapse that will lead to the gold and silver macro bull market is far bigger than how the dollar does versus the Japanese yen and the euro. Yes, it will go up more initially and will have a super spike into the collapse. Why do you want to focus on the sub story when the key story is gold? The key story is gold. It is not just a little annual pilgrimage for silver to the $25 mark. I will be showing you the silver chart shortly, and we'll be laying those comments to rest as people sleep when the real wolf comes. Too many cry wolves and everybody stops reacting. It's perfect. This is the moment, friends. The charts are showing it to you. This macro structure will take you at your current level of around 7.6 to 52 times. 52 times. So the inflation, not 52 times, to the level of 52. Let me apologize and correct myself. 7.7 going to 52 is going to be around 7 times, 6.5 times. You're going to go 6.5 times up faster than an ever-growing inflation rate as declared by the CPI. They won't be able to hide it. It's going to go up eventually in double digits. It's going to not be hidden. Your gold will be playing catch-up and beating it by 6.5 times the measure, going from 7.6 as it is now to 52. That's right. And in that time frame, my friends, this block, this old dear block that we've been waving in its join, let me take you to the second most exciting precious metals chart, and we'll jump in between these two. The second most exciting chart is the fact that this could be the time that silver starts its triggering event. We have had a cry wolf there with a wick. We had a 1 wick cry wolf. This was a 2 candler. So it gets an asterisk. Number 3 gets an asterisk. It was a deep dip wannabe, but it wasn't able to follow through. This is number 4, and now you're at number 5. At the very worst, this is going to be an asterisk one, because there'll certainly be another wick, even if it were to rush back up, unless it started literally today with silver collapsing relative to gold. So we're looking at another major rejection like this one, or the alternative, where it spills, you get your return move, and we head aggressively running through every single one of these lows. Every single one of these lows, one after another. That low, that low, that low. In the gold-silver ratio, taking them out one after another, in a journey to, yes, the 65 first before we will pause. That is the neckline on the macro head and shoulders that we've drawn. How many times? We've said this is the bagel that must be broken. Look at that momentum. Does it not on the bigger time frame look a lot more foreboding for the downside? That equals good, of course. 65 before you rest, overshoot, rest, wind up, and then spill. Wait for it. Yes, 32s and 31s would be the next major move for us. 32s and 31s, the next major move for us. And eventually, potentially, let's go log view. We are already log view. Look at this. 32, the macro could in fact go single digits close below 10 and maybe even lower with silver to gold. So let's just summarize. Previous chart with gold. Gold's going to go up 6.5 times the CPI rate, taking it from a value of 7.7 divided by the BLS stats, right the way up to 52. By the way, once it crosses the second interim, open territory, this is going to be a melt up, friends. You're going to hit unobtainium in many, many venues, and then there'll be very few places where you'll be able to get it. Everyone who's not invested will be melting down their jewelry and selling it off to try get a little bit of rental money. That's what's going to happen as part of this. So if you go from, at the same time as that is happening, silver from a 82 value to sub 10, let's say 9, 81 divided by 9 is another 9x multiple that silver will outperform gold in an environment where gold is going up 6.5 times faster than what's likely to become a double-digit CPI inflation rate. Why double-digit, you say? Did you not see the cocoa chart? Are you not watching the coffee chart? Did you not see the oil and gas ETF? Did you not see the oil chart? That's why you're going to double digits. That's why gold's going to do 6.5 times that rate. And that's why silver could potentially do a further 9 times on top of that. And we've said before in previous videos, there's scope for it to hit 4 digits. Gold go to 10, gold start looking north of $10,000, and you have silver at a 10:1 ratio, you have $100. You have gold at 15 and 25, and you have silver at a 7, 6, or 5 ratio. It starts to get very, very interesting. Take gold to 100,000. You say, never, Francis. You're mad. You're insane. It's $2,000 now. How many quadrillions of debt do you think they've really created? That asset buying power and value. Don't forget, they are also participants in the old system, and they want to transfer that high valuation into the new system, which is going to be digitalization of everything and tokenization of everything, so that they can buy your NFT. That means they own this bar of silver. Don't register it. Do not register your property. Do not register your properties with tokens, no matter how long. Push back, go dark, do whatever you must. They will come eventually for your wealth, but we're not there yet. First make it, first win it, then you preserve it. And I'm here to tell you, this is a runaway commodity bull market. It's a runaway commodity bull market, but the financial engineering is the hub that is failing, and the most exposed and the biggest alternative to financially engineered commodity is the little yellow guy and this one here in my hand. And in the meantime, if you own these two, you'll still be able to buy your coffee, your cocoa, and everything else. You'll still be able to exist. In fact, you're going to overperform. You'll be able to buy more of it. You will build wealth. Plus, inside our community, you can trade HVFs with a little bit of discretionary leverage at moderate levels to supercharge your wealth and drive more of that money into more silver and gold. And you will watch all the assets that are financially engineered, like cars bought on HP, from Porsches to Ferraris that are extreme and premiums all in them, and fancy houses. And you will watch the financial leverage unwind on that, and you will see your gold and silver outperform everything that you will be buying from those that are thrown out and currently exposed to interest rate spikes that cannot sell their assets because someone who needs finance to buy it would have to pay some double-digit insane interest rate unless he has all the money himself, which they don't. Most people don't, because everybody uses finance. You will see the financially engineered assets lag relative to the precious metals. This is your financial alternate system, friends. And if you go to the Pure Gold link, you will pay exactly what I pay. No add-ons, no anything. I get a little segment slice for their marketing budget as thanks from them for generating some business. And I say thank you to you for supporting me, who's out here trying to ensure you do not fall for the lies that are being propagated. This is debt and fiat collapse. Hear me now. Everything going up is not all having an industry-specific crisis. It is the buying power of money, the proliferation that the criminals in those central banks are putting against you to undermine you, to destroy your standing, to destroy your financial wealth. And you must recognize they've weaponized the system to enrich themselves at the expense of you. And it's time to preserve. You should keep peppercorn funds just to maintain your existence in your banks. Your banks are going to go bankrupt with the collapse of debt and fiat in varying degrees. You can lose the balances that you have. You should extract as much as possible, and you should be giving Pure Gold a call and buying silver and gold. You've met the owner, you've seen him, you will pay what I pay. I use them myself 100%. I will never affiliate anything that I haven't had a good, reliable experience with and utilize myself. Simple as. So go ahead, join us in preserving, because there's more coming. There's more coming. And this thing is accelerating, guys. It starts slowly. You do not understand that most days we are ticking up. I have to show you the beautiful silver chart. So for those that said it was a $25 annual pilgrimage that will get all the precious metals guys excited again. Of course they do a lot of fake out runs. They don't want you to participate. You have to be belligerent. You have to keep showing up. Let me tell you, this capping descending grind line has been tested many times. And we have told you most times it is yet to be in a breakout. When gold formed on the 2K mark, it's upside HVF like that on the 2K mark. We told you that's a breakout. At the same time, that was happening on the silver market. The same squeezy, only it was dipping its nose to once again kiss the soft floor that we've told you countless times at 22 is the soft floor. Yes, it got run once here on an inverted head and shoulder, and over there in extreme cases. But the breakout came when we told you it came, in that blue circle. Now look at me now and look at those two candles that since occurred and tell me this is the annual soft little trickle up to 25, the pilgrimage to $25. This, my friends, are how breakout candles look. This are how breakout candles look. And you can antagonize all the precious metals men you like. They're going to be smiling now. They're going to be smiling because you've run that high, you've run that high, you've run that high, you have run this localized high, and you are now at the point where you have run that localized high. Let's get it a nice horizontal line, and the ultimate high that's there, you are still waiting to run, and the Wall Street bets, like side of intraday market, you are still waiting to run. Are you going to tell me those aren't falling on balance of probabilities with this momentum after that break, with these kind of candles, with a little look south on their funny data number and the what the hell we don't care candle that goes back up? I'm saying to you, new silver highs. This has just begun. Go and look again at that gold divided by CPI and look at that HVF and understand, if you think you've missed out and it's too late, this hasn't even triggered technically yet in terms of the CPI. It is just crossing the funnel out of here. You will have that as a melt-up moment, which will likely chronically overshoot the 52, which means you're going to probably get more than a 6.5 multiple if you get in now. And that BLS number is going to be going up, not down. The interest rate spike theory of the debt collapse. Debt to devalue, the rate must go up. Remember this. How many times did I try to reduce it to something simple? They cannot cut rates. No one wants to buy the debt that much. And there's too much inflation. And we've said it, we've said it, we've said it. We've said it a countless number of times. So I'm repeating myself. I'm Francis Hunt, the market sniper, the crypto sniper, and the great reset sniper, telling you reset is here. It's happening. There's going to be events that come out of this. This is the polarizing event I spoke of 2017. It is absolutely accelerating. Pure Gold awaits your call below, and I await your call to help maximize you trading HVF method. Inside of this, a lot of it are longs on commodities. We have accounts at all-time highs. We've got coffee hitting all-time highs. We've got them all on. You too can build wealth in these times. Take action or suffer in peril in a lengthy manner. Please, please hear me now. Till next time, we'll catch you again soon. Bye for now.